I'm Charlotte McLeod with the Investing News Network, and here today with me is Byron King of Agora Financial, who writes and edits Jim Rickards Gold Speculator. Thank you for joining me today.
Well, good morning. It's great to be with you. Thank you.
Great to be with you too. We're here at the Sprott Natural Resource Symposium, where you'll be giving a couple of presentations on gold. Could you start by talking a little about where you think gold is headed in 2017?
Well, in general, gold is heading up along the way. It's going to go up and down as it always does. But in general, we are on an upwards trend. The Federal Reserve is trying to fight that by hiking interest rates. But at some point, the Federal Reserve is running out of ammo in terms of what their policies are up against the realities of the economy. We are looking for inflation in some parts, deflation in some parts, but all things tend to favor gold over certainly the medium to long term.
Do you see the Fed hiking rates again this year? I know that's kind of something people are wondering about.
There are a couple more meetings. I don't anticipate anything in the near term. Possibly by December they might do something, but even then, that's really throwing darts at a board right now from where we stand. It all depends on the strength of the economy. I mean, you see all sorts of things. You know, the stock market's booming and tech is supposed to be doing great, but the auto market is slowing. Housing has problems. It's very iffy. Student loans are iffy. There's all sorts of things that could bring the economy down, such that the Fed is constrained not to raise rates again.
Okay, so over at Jim Rickards Gold Speculator, your tagline is "Mining fortunes as gold marches to $10,000." I think that's one of the more bold gold price predictions I've heard. What would need to happen for us to see gold at that price?
Well, what needs to happen is basic fifth or sixth grade math. And Jim Rickards he completed much more than sixth grade. He has a couple advanced degrees from Johns Hopkins and a law degree, and he's plugged in with the Federal Reserve and many other things. All we have to do is take global money supply, M1, M2, M3, throw that in there for anybody who's into the acronyms, take the global money supply and back it with 40% gold. And to do that, you will need $10,000 an ounce of gold to have any sort of gold backing to a global monetary standard. And you know, really, when I say global, I mean from our standpoint, a U.S. dollar type standard.
Okay. Do you have a price prediction for this year, or?
Well, this morning I checked, and gold was right around $1,250 an ounce, buck or two, one way or the other. I anticipate that we're going to see some strength into the fall. There will be a typical rise probably into September, October. There's always an October surprise of some sort in the stock market. Global events are what they are. Anything could happen. I mean, whether it's a war in North Korea or something, anything could happen. I mean, just the mind reels at the prospects. But I do think we're going to see higher prices, higher than $1,250. I'm looking into the 1300s for sure.
Okay. So from what I understand, your background is in geology. What advantages has that given you in terms of picking stocks? Do you find there are factors you look at that somebody without that knowledge might overlook?
Yes, I have a background in geology, and I was sort of a hard rock guy, mineralogy, crystallography, the hard rock, igneous, metamorphic type things. Then I worked in the oil industry, so I actually have a lot of different angles on geology, all of which tend to come into use in doing what I do. Another thing, though, I spent time in the U.S. Navy, so I'm used to being around big systems. I'm used to being around things that work or that are supposed to work. So I look at the asset. I look at the geologic asset. Is it a good mineralized asset? Can you is there ore here? Are there minerals here? Or can you get the elements that you want out of this deposit? Then I also look at it practically. Can you build a mine? How far away is it? Do you have power? Do you have water? Do you have, and I look at people. Do you have the people that you need to do what you need to do? So the geology to me it certainly adds an element of deeper understanding, and to me personally, it adds a lot of fun to what I do.
Okay. So every investor is different, but in general, do you have a recommendation for how people allocate their portfolios, as in stocks versus physical or so on?
Yes, indeed. When somebody says, "Oh, yes, I've got my portfolio is allocated, into hard assets like gold, and then I have aerospace, and I have tech, and I own hotel chains and fast food chains. I say, no, you haven't allocated at all. You put everything into stocks, because if the stock market tanks, you're in trouble. You need to get around things. In terms of your portfolio, I mean, how broad do you want to go? You own a house, that's great. Do you have life insurance? That's great. You need some of that too. You should own physical metals, gold and silver. How much? Well, it depends on how much you want to put into it. Jim Rickards and I recommend at least 10% of your portfolio into the hard metals angle. I would be more aggressive. Me personally, I think probably 10% ought to be hard metals. I mean, really tubes of silver coins or silver bars, or if you're that kind of person, tubes of gold coins. You should have 10% of those. Then another 10% into these mining plays. I'm talking the junior guys that have incredible upside. Right about now, the downside is there's downside to everything, but the downside is relatively limited, I would say, on the juniors, but the upside is wide open in terms of where gold ought to go. We were just talking about $10,000 gold a moment ago.
Okay, and so you're more interested in those juniors rather than the producers and more advanced stage companies?
In the Rickards Gold Speculator newsletter, I look at early stage junior type companies. I look at explorers, I look at developers, and I look at producers, early stage producers. I'm not talking the big guys like the Barracks and the Gold Corps and such. Those they stand on their own merits on a whole other way of analysis. But yes, I look at the small, underappreciated companies. Our newsletter covers companies that you probably haven't heard of if you don't spend a lot of time in this space. Names that you just don't see. You will not see these names in the Wall Street Journal or New York Times or Barron's, I assure you.
Okay.
Not until they get bought by the Gold Corps or the Barracks of the world.
Okay, got it. Okay, last question. We've spent a lot of time talking about gold, but are there any other commodities you're interested in right now?
There are. I mean, I write a pure play gold, silver type newsletter, but in terms of my personal interest and just where we might go with a different newsletter, I think uranium is greatly undervalued right now. And it's an easy space to invest in because there are just so few companies and they are so badly beaten down. I've got a couple of companies I look at in the graphite space that I follow that to some extent, rare earths, and then a few other angles on large metal type issues. I mean, out of the copper industry, for example, I follow cobalt. I'm always looking for a good story because whatever element, whatever metal, whatever mineral you're talking about in the world, there's probably not enough of it, and there is a good story built into a good company that can actually execute. Not a company that's in the fundraising business for management, but a company that can actually execute and move a project along to a better, higher state.
Okay, well, that's all from me. Thank you so much for joining me today. Once again, that was Byron King. If you need more information, you can call 1-855-251-6937, and a dedicated team will address your questions. And I'm Charlotte McLeod with the Investing News Network.